Hey traders, and welcome back. I'm going to do a trade review here in a few seconds, but before I do, I want to go through something. I'm going to talk about some stocks, so if you came to this video listening for stocks, don't worry, I'm going to get to that in a second. However, I want to talk about the Forex markets and why I am staying away from it. Um, I'm not the type of trader to complain very often. um, I really am not. But there are times when I always kind of think of myself as one of the most adaptive traders in the world. And I always teach my students that if you come and you get educated by me, you'll be able to trade any markets. But there are some markets that are just absolutely untradeable, and the Forex market in the last 3 months has actually become that way, and I want to show you why. So hang with me for a second here. So I'm just going to take the euro as an example, and we're going to look at a one-day chart of the euro. So I want to show you, why you want to be staying away from this market. So, here's where the United States decided to end quantitative easing, and this is when the rumors started to happen, and Euro US dollar went from 130 all the way down to almost a low of 104, right? Almost to parity. And the market just sold off. Then we went into a big range here. Now, this was actually fairly tradable, believe it or not, because this is just a standard pullback here during this time. Nothing unusual really happening. We really form a balance area. We should have come down and take out these lows, which is exactly what we did. But then we reacted off of those lows pretty hard, and then we went into a really funky period, and we've kind of been okay right up until about April of this year. And it was April of this year where the market started to really change. And I want to talk about that specifically for a second. Again, if you're here for stocks, don't worry, I'll get to them, I promise you. And it was April 15th, I believe. May 15th, forgive me, when the Fed came out and suggested that, not suggested, but said 3 interest rates this year. Interest rates hiked this year. Now, if we get 3 interest rate hikes this year and potentially, 4 the following year and 6 the following year after that, the U.S. dollar should be getting very, very strong. However, we see an exact opposite reaction here to the U.S. dollar. As a matter of fact, the market shot up, went higher, shot up and shot up and shot up. Now, why is this happening? If we're getting interest rate hikes and the improvement in the labor force in the United States and some signs of inflation, why is U.S. dollar so weak in comparison to the euro? Well, kind of the opposite is happening to what happened way up here when the Fed started to become, or at least hint that it was going to become more hawkish. Okay? And I think we're starting to see the exact opposite happen, not only in the euro, but also in the GBP. It's got its own problems, right? The GBP, a little bit different because we have the Brexit issue that's going on, but this is another reason why it's becoming kind of untradeable. And it's basically the same thing going on with all other pairs. You have just incredible forces, a change in action. Here's where Paula's, there's a Canadian dollar, this should be trending higher. But here's where we have low oil as well too. Here's where Paula's came out and suggested that the Bank of Canada might actually be becoming a little bit hawkish in itself too. So That being said, um, generally the volatility that's happening in the forex market versus the fundamentals and sentiment are just they're not lining up. You know, the ducks are not lining up, and it's making the markets extremely difficult because you have future sentiment playing a role against actual data, and that becomes a bit more difficult and problematic to change. So, my point being that I am a very, very adaptable trader, and I like to go to where the money's easier. So, enough of the forex markets for now until we start to figure out, exactly what we are expecting and exactly when the ECB is going to start to become more hawkish and what their guidelines is. So I'm just going to stay away from the forex markets right now. I have been making pretty good money in it, but I've been having terrible days. So like 10 really good small wins and one big loss. 10 really good small wins, one big loss. Just and it's commission that's been killing me, to be very honest with you. If you took away all of the spreads, I would actually be very profitable, but with the spreads it's just destroying my account. So being the adaptable trader that I am moving to easier markets, hence today. So the last couple of days I've been back at my bread and butter trading, which is stocks. And here's my trading for today. $866. Mara was a bit of a swing trade. That was a short, right? And that was more of a swing trade on a day, based off a daily. HBR was I think my biggest winner today. I took a short in here, and that was a great trade. SPWR, I actually took this in my prop account too, with some really big size. I didn't get as much size here on this trade because I was late, because I was busy filling an order on my prop size. I took a short here. I probably should have reshort this area at the close. Foxa was my only loser today. I got long Foxa off of this level here, and it never really worked out, and I got stopped out for a loss there. So decent start, 2.27. Yesterday was up about 1.5%. So back at it. And there you have it. I'll post this video and you'll see more stock trades coming from me in the next couple of days because I'm just staying away from Forex right now. It's a bit too kooky for me and I do not understand the drivers of it at this particular moment in time. And I think there's just too much going on geopolitically, internationally, pushing and pulling that market. So back to bread and butter. Bye for now.